Good morning guys! So ngayon ay nasa lesson 3 na tayo sa ating subject na Financial Risk Management. At ang title ng ating pag-aaralan sa lesson na ito ay The Risk of Financial Leverage. At siya nga pala, ang ginagamit nating reference ay yung book na Financial Risk Management and Derivative Instruments by Michael Dempsey. Financial leverage refers to the practice of a company utilizing borrowed funds to finance its investments and expand its asset base in order to generate greater returns on its own capital. Financial leverage is when someone intentionally borrows money to invest in assets. Hindi yung uutang para gastusin sa sarili. The goal is for the returns on those assets to be higher than the cost of borrowing the money. The purpose of financial leverage is to increase a person's profits without needing to invest more of their own money. Ito ay paggamit ng mga hiniram na pundo upang tustusan ang mga pamumuhunan at palawakin ang base ng asset upang makabuo ng mas malaking kita ang kasalukuyang kapital. Ang financial leverage ay kapag ang isang tao ay sadyang humiram ng pera upang mamuhunan sa mga assets, hindi para tustusan ang pangangailangan sa pamilya. Ang layunin ay mga kita sa mga asset na iyon. Yung mga kita sa mga asset na iyon dapat mas mataas kaysa sa halaga ng paghiram ng pera. Ang financial leverage ay upang madagdagan ang kita nang hindi na kailangang mamuhunan ng higit pa sa kanilang sariling pera. Financial leverage is employed to increase the potential earnings of an enterprise, but it also escalates the potential adverse consequences in case the investment fails. When we say highly leveraged, it signifies that it possesses a greater amount of borrowed funds than owned capital, whether it is a business, asset, or investment. Leverage is a common strategy employed by individuals or organizations to increase their investment potential and expand their equity base for various projects through the use of borrowed funds or debt. O ito'y common na diskarte ng mga marurunong sa negosyo. At may mga gumagaya pero pumapaltos. It is important to note that just as creditors do not take part in profits, they also do not partake in losses. That's why interest and principal payments remain fixed costs for the company, which must be paid even in times of low profitability. So kahit ano pa yan, no? Kahit na bumaba pa yung kita, walang pakialam dyan ng nagpautang. So mahalagang tandaan na kung paanong ang mga nagpapautang ay hindi nakikibahagi sa mga kita ng kanilang pinautang, hindi rin naman sila pero nakikibahagi sa mga pagkalugi. Iyon ang dahilan kung bakit ang mga pagbabayad ng interes ay nananatiling kumbaga nakapirming gastos para sa kumpanya na dapat nilang bayaran mataas man o mababa ang kanilang kita. Leverage is primarily used by investors to greatly enhance their profits. Hindi lang pala investors, pati mga traders. By multiplying their original investment with additional capital, they have the potential to greatly increase their gains. Leverage provides the opportunity to access more expensive investment options that would typically be inaccessible for individuals with limited initial capital. Leverage can be beneficial for companies, o sabihin natin smart companies, in situations that involve a significant amount of capital with short-term and low-risk requirements. These scenarios may include acquisitions or buyouts, where a growing company might need temporary funds to capitalize on potential profitable future growth prospects. Instead of utilizing excess capital for ventures that entail risk, leveraging enables these companies to seize timely opportunities and swiftly exit their leverage position. So may mga ganun, no? Sasamantalin lang nila yung opportunity. Pagka nakuha nila yung target na kita, mabilis din naman silang lalabas sa pagkakautang para wala nang regular na bayarin. Dapat din naman pero nating malaman yung downside nito. Utilizing leverage to amplify profitable investments has the drawback that it will also intensify losses in an unsuccessful investments. As a result, there is a possibility of incurring losses that surpass the initial investment. Pwedeng mawala lahat ang iyong puhunan at baka may matitira pang bayarin kung hindi nagtagumpay yung investment. So yan yung downside ng leverage. Utilizing leverage can be a complex process. requiring investors to remain informed about their finances and acknowledge the potential risk involved. This responsibility entails carefully overseeing the portfolio and potentially injecting additional funds sometimes. While financial leverage has the potential to boost a company's profits, it can also expose it to substantial losses. Such losses are usually experienced when the debtor is incapable of meeting the interest payments on the asset as a result of inadequate returns. This situation may arise either if the asset's value declines or if interest rates escalate beyond manageable levels. Siyempre, yun ang mararamdaman ng isang nangutang na maliit na yung kita o minsan wala. Talagang mararamdaman niya na ang laki-laking bayaran yung interest. Tapos, minsan may mga kasama pa sa kontrata na yearly tumataas yung interest. So, yan ay magiging pabigat na sa kanya na sana ay magiging suporta sa kanya para mas kumita ng malaki. Pero ganun talaga. Mayroong advantage, mayroong disadvantage. Now, we come to realize that debt enhances a positive financial state or worsen a negative financial state. And this was clearly evident in the past worldwide economic crisis, when corporations and financial institutions acquired low-cost debt to boost their earnings. Nonetheless, they soon acknowledged that while excessive debt could be advantageous during prosperous periods, it also had the capacity to push them towards bankruptcy or near bankruptcy when the economy declined. Imagine yourself that you are interested to buy a real estate property that you perceive to be promising investment opportunity. And the property's price is 1.5 million. So let's say 1.5 million. But your financial limitations confine you to a budget of 500,000. Nonetheless, there exists two distinct plans or strategies to contemplate in order to obtain the full amount of 1.5 million required. Plan A entails the concept of borrowing a sum of 1 million pesos at an annual interest rate of 5%. To implement this financing technique, the plan involves combining equity with a cash investment amounting to 500,000 and debt, taking out a mortgage of 1 million pesos. And this strategy allows for acquiring the required funding, but it does require repaying the interest of 50,000 per year to 5% interest, in addition to eventually repaying the initial borrowed sum of 1 million. Plan B consists of avoiding debt leverage. A method to accomplish this is to persuade friends to become partners. For instance, by convincing two reliable friends to contribute 500,000 pesos each. The necessary 1.5 million for the project can be collectively obtained. In return, joint ownership is granted to the partners, which their share in the property determined by their individual investments. This approach allows you to finance your investment using equity, which effectively prevents any financial responsibilities or obligations. Does leverage have a varying effect on your investment even if you invest the same amount, 500,000 in the same asset, the same property in both scenarios? When your investment increase in value through borrowing money, the profit is exclusively yours. Whereas in partnership with your two friends, the profit will be divided into three. But in the unfortunate event of investment losses, only you will bear the consequences. Kapag nangutang ka ng 1M, ikaw ang magbabayad ng interest, mag-isa ka lang, tapos babayaran mo pa yung 1 million na yon. In contrast, if your investment failed as partners, the three of you lose. Hindi siya ganoon kasakit dahil may kasama kang natalo at higit sa lahat, wala naman kayong utang na babayaran. So ayan ay pinag-iisipang mabuti, pinagpaplano mabuti at hindi dapat agad-agad ay nagda-dive sa tubig na hindi mo alam kung ano yung nasa tubig. When financing is done through long-term debts like bank loan or borrowing from a lending company, there are fixed charges in the form of interest that need to be paid regardless of the operating profits. In periods of economic downturn, it can lead to issues with managing cash flow as there might be insufficient sales revenue to meet the interest payments. Alternatively, if funds are raised through equity shares, the dividend to be paid is not a fixed charge and is instead paid out of operating profits. Hence, when determining the financial leverage, it is important to recognize that the dividend that needs to be paid to the shareholders is considered a constant expense. It should be emphasized also that any remaining profits from the company's operations are distributed to equity shareholders after all other obligations have been fulfilled. Dapat ding bigyan diin na ang anumang natitirang kita mula sa mga kinita ng operasyon ng kumpanya ay ipinamamahagi sa mga shareholders ng equity pagkatapos matupad o matugunan ang lahat ng iba pang mga obligasyon. There are many people who enthusiastically embrace the notion of financial success and make decisions without carefully assessing the potential risk involved in their swift actions. For some of us, the home mortgage is the most personal and significant form of leverage we experience. It has the potential to greatly impact our lives in a positive way over the course of many years. However, there are two crucial factors that determine whether financial leverage actually brings power. Firstly, The borrower must be capable of making regular payments to avoid the risk of property foreclosure. Secondly, the value of the asset that the leverage is based on must remain stable. While leverage can greatly amplify profits when asset values increase, it can also heavily erode returns when values decline. Without these necessary conditions, the benefits of leverage can quickly turn into significant liabilities. Many people tend to be optimistic and believe that taking on debt will enhance their capabilities rather than burden them with continuous cash outflows. When buying a house or investing in a business, individuals do not anticipate the value to decline. In times of economic prosperity, the perception of leverage tends to be overly positive, although the negative effects of the recent recession may have fluctuated public opinion. The crucial factors for effectively utilizing leverage are: number one, rational thinking, practical assumptions, and number three, a clear awareness of the associated risk. In order to ensure successful borrowing, it is crucial to possess a thorough comprehension of potential risks. The concept of leverage can have favorable outcomes, as many individuals and businesses have successfully used loans to initiate their ventures. It can be effective and beneficial in appropriate situations. Lending has persisted for centuries because it is a valuable tool in responsible hands. Yung mga para sa mga responsable lang ito. However, it is crucial for borrowers to thoroughly assess and plan for various potential outcomes, both positive and negative, regarding their business. Without such careful analysis and preparation, debt can become one's greatest adversary. So, what advantages and disadvantages come with using financial leverage? The benefits include the ability to generate higher profits without the need to increase sales, lowered investment risk, and quicker decision making with less planning and implementation time compared to alternative methods. However, there are risks to consider, such as interest rate, the possibility of bankruptcy if interest cannot be met, and potential market value loss for publicly traded stock. When the return on investment is higher than the cost of debt financing, it is known as favorable financial leverage or positive financial leverage. This encourages finance managers to utilize more debt financing to maximize benefits for shareholders. So yan talaga ang pinaka target ng financial leverage. Dapat mas malaki yung potential na kikitain kaysa doon sa perang hihiramin. When the return of investment is lower than the cost of debt financing, it becomes unwise to pursue debt financing, as it would result in increased losses and decreased benefits for shareholders. This situation is referred to as unfavorable financial leverage or negative financial leverage. Ba't ka pa uutang kung yung kikitain ng iyong paggagamitan ng uutangin mo ay hindi niya malampasan yung amount ng iyong uutangin? Ano pang gamit ng utang nun? Furthermore, when the ROI is equal to the cost of debt financing, it is not recommended to borrow funds. This is due to the fact that the company may not be able to generate earnings through debt financing.